J.R. Verma is with us, and he's been tracking this story very closely as well with us over the last many months. Professor Verma, thanks for joining in. Do take us through your initial observations on Tech Mahindra winning at 58 rupees.
Well, I think the thing now moves to the company law board, which I think will have to approve this, and one doesn't know how the other bidders will react, and then we could be sure. But otherwise, I think the bid number looks a reasonable kind of number that most of us were expecting. We were expecting anything in this range, 50 to 60 was what we were expecting. It has come well within that. So no real surprises.
Okay. Do you think the board has done a reasonable job since it stepped in of getting a partner to come in and take over Satyam and do what it can to prevent Satyam from going down and to ensure that its business and its employees do not get a very bad deal?
Yeah, that it certainly has. It has certainly kept the company alive for 3 months. I think without that intervention, it would probably have disintegrated by now. The clients are still there. The employees are still there. They've been paying their bills. I mean, all of this, I think it's still credit to the board. But what happens from this point on, is still an open question. The whole set of issues about what kind of conflicts of interest could arise between Tech Mahindra and Satyam, because both are in the same space. The whole set of those questions will now start. What happens if customers start new contracts start being signed with Tech Mahindra directly instead of with Satyam? Those whole set of issues are now going to be there. As a minority shareholder of Satyam is going to worry now. Imagine that there is a new client. Why should Tech Mahindra sign that client for Satyam? Why can't it sign it directly for Tech Mahindra? Because if it signs with Tech Mahindra, 100% of the profits go there. If it signs it for Satyam, it's only 51%. So unless you get to a very quick merger and so on, that whole set of questions are now going to come to the fore. You will also have clients who are clients of both. And how is it being priced on the Tech Mahindra contract, and how is it going to be priced on the Satyam contract? It's a whole set of issues when you do a partial sale. A partial sale is the most horrible thing to imagine in this kind of context. And I think that view of mine remains unchanged.
In terms of the 1, 2, 3 step process followed, though, Professor Verma, do you think this was the best way to have gone about it? The board set out a technical bid pre-qualification, then a financial bid qualification, and now we have been given to understand that the highest bidder has finally taken Satyam home.
Yeah, that's absolutely right. You see, I think, what I'm saying is that if you take as given that you're going to do a partial sale, you're not selling the whole company, you're only selling a majority stake, then what they have done is absolutely fine. What else can you do? You cannot actually open it up for financial bidding without a technical bid. So I think what they did was absolutely right, and they put in a very transparent process of doing all of that. All that is fine, but while giving full credit for running that part of the process well, I think one should not be blind to the fact that the decision to sell only a part of the company was a major problem, and it continues to be a problem. Even today, I think even after the bid is closed, it will be a problem. It will be a problem until at some point Tech Mahindra decides to merge Satyam into it and get rid of the minority shareholder at the subsidiary level.
Akhil Hirani joins in as well for more on the process as it might unfold for the open. Akhil, hi, just walk us through whether you've done any preliminary calculation on what the acceptance ratio might be. The price, as you know, is 58 rupees to a share.
Hi, Mithali. First of all, I think the news is good. I mean, it's a culmination of a process which has moved fairly quickly. In terms of pricing, etc., I mean, we haven't done any serious number crunching on this, but my sense is that the open offer is going to yield a lot of sellers. I think that Tech Mahindra should cross the 51% threshold. Of course, with the new modifications to the takeover code, SEBI will ultimately decide, on the price band, etc. I don't believe that it's going to be too different from, what the bid price is. Maybe it's a slight markup to that. And, in all fairness, I think they should get a 20% or more subscription in terms of selling shareholders.
Akhil, morning. Professor Verma has just been telling us that eventually a merger might sort out between Tech Mahindra and the listed Satyam might sort out many of the thorny issues from a bidding for contracts issue between the two parties, given that Tech Mahindra's ownership in Satyam is only 51% post-open offer, presumably. But do you think a merger is the eventual end game to which it might head?
I think so. The point is that, there are some conditions which the board and the bidding process imposed on these potential buyers. And so one would have to look at those as to whether a straight merger immediately and whether making this part of a larger group is what the process permits. So that's the first point. I think secondly, Satyam, with the 51% ownership by Tech Mahindra will become a subsidiary of Tech Mahindra, and the balance sheet and all of that will be consolidated. Now, so in terms of numbers, ultimately it will benefit Tech Mahindra to that extent. However, in terms of the issue of different contracts and if there are overlapping clients, how will they be managed? I think in the interim, there may be some realignment, and there will probably be some rehashing that will have to be done. And so I think I would look at probably the merger scenario panning out over a year to 2 years. I don't think that's going to happen immediately.
Thanks.
In any event, a merger takes a good 6 months.
Thanks, Akhil, for that.